Hello everyone, my name's Holly Mackay and I'm Managing Director of the Platforum. I'm joined today by Toby Allebon. Hi Toby, who's Head of Specialist Cash Products at Investec. We're going to talk, Toby, about what place cash has in the platform space. How many platforms are you working with at the moment?
We work with roughly a third of the 30 or so platforms in the UK market at the moment. So we've been operating in the wrap space probably for the last 3 or 4 years. We've been approached by both the advisor community and the platforms themselves to put cash products on the platforms. So it's really been of the niches that we sell to the intermediary market through the platform space has provided the most growth by quite a long way over the last 2 or 3 years.
Okay.
So it's really been a huge growth strategy for us.
Okay. And this is not supporting the actual cash account, is it? This is cash as an investment for advisors and clients.
Yeah.
So how does it work? How does an advisor go to their platform and actually access one of your fixed deposits?
So I think first of all, the provider, the wrap has to actually provide cash accounts, so other than the hub account or the default account. So the products that we offer generally through the platforms, as you're absolutely right, it's fixed term deposits tend to be the most popular. The practicalities will obviously vary between the platforms, but there'll generally be a section on the platform for cash products, well, assuming there is one, and then within that there might be a panel of banks providing different accounts, some shorter term, some longer term, and it's really a case of looking at the rates, having a conversation with the client about whether those rates are appropriate and what the strategic allocation for cash should be within that client's portfolio, then getting in touch with the platform to actually make the investment.
Okay, so you hold the rates then presumably for a period of time, they're not updated on a daily basis?
Yeah, unlike our direct retail fixed term deposit rates, which can vary not quite day to day, but we've certainly seen in the external market, we've seen a lot of volatility more recently in terms of fixed deposit rates changing, whether that's a lot of the clearing banks or the high street banks tapping into the funding for lending scheme, and that maybe is leading to not quite so much a desire for that retail cash, so rates are coming down, but we have seen a lot of volatility in those retail rates. But the rates that we provide to platforms, we get approval from our central treasury function to effectively have those rates for 1 month in advance, so that advisors have the surety that the rates aren't going to change.
So they've got surety, but I mean, cash, is it a difficult sell at the moment? I mean, what's the current rate on your 1 month fixed term deposits?
Generally, advisors are taking up longer term, so 12-month fixes tends to be the most popular term at the moment. Our 12-month rate at the moment is 3%. So perhaps whilst you compare that to the potential upside, for example, in the equity space,
depends who you invest with.
Yeah, absolutely. Yeah. So 3% is certainly, compared to some of the other asset classes, not necessarily a headline grabbing rate, but with a fixed term deposit, you know that the capital is protected, you're going to get your capital back at the end of the term, and you know that 3% is not going to vary. So you're, whilst you're maybe giving up some potential upside, you're safe in the knowledge that you will get that rate for that time period.
There's a question, I guess, about whether the place that cash has on platforms, because some people will point to the extra layer of fees, and we were talking sort of earlier, in a low rate environment, and there's an advisor charge, and there's a platform fee on top. Are platforms really the best vehicle for fixed term deposits?
Yeah, it's a really interesting question, and I think there's a case for both. I think there's clearly a desire for cash on platforms because we've been approached by both the advisors and the platform providers to put cash products, and particularly the longer term savings style accounts on platforms. So there is clearly a desire. In some cases, you may perhaps be able to get a premium in terms of the rate paid through a platform because a bank or a cash provider is able to generate economies of scale through the platform channel as opposed to a direct retail channel. So there may be a premium on the rate which might counterbalance some of the fees, but I think it really it's going to boil down to personal circumstances for the client. So it may be appropriate to have it on platform, And you're right, I think in some cases it's probably more appropriate to hold it off platform.
I guess also to some degree you're offering an alternative to it sitting in the platform cash accounts, the sort of trading, the transactional cash accounts. And I don't know what those are paying at the moment, but it's typically a couple of basis points lower than the Bank of England rates.
Yeah, it's generally not very much. So the accounts that we tend to see being opened, as I've said, are the longer term fixed deposit accounts. And I think there are two ways that advisors generally approach cash. One is it's a very specific strategic allocation, and particularly in today's volatile environment, that strategic allocation is potentially growing. I think we've seen it growing. But also there's a case to say if clients have if they have a particular need that they see for the cash coming up, you may as well make that asset class work for you in the meantime. So instead of having it sat in the default cash account, put it in a fixed term deposit or even a notice account and generate a better rate of interest on it.
Yeah. So you certainly prompted me after our chat to go into my crummy old current account.
Great.
Job done. Kind of crystal ball looking down the track, do you anticipate much change in the rates you're paying, or do you think we're stuck for quite a long time in you've mentioned a 3% environment?
We certainly don't see the base rate increasing anytime soon. I think the interest rate environment at the moment is relatively volatile, but it's partly driven by the bank's desire for funding and desire for cash. It's also partly driven with half an eye on the external market, and as I've said earlier, I think a lot of the retail rates are coming down fairly significantly. So there are two elements, I think, or those two main elements to a bank's pricing policy in terms of the cash it's trying to generate. So yeah, it's always a bit of a balancing act in terms of raising the appropriate level of funding and keeping an appropriate position in some of the best buy tables.
Okay. Last question, Toby. I mean, you've talked about growth of fixed term deposits on platforms. If you had to sort of say, well, looking ahead, RDR coming up, do you see more opportunities there? If you had to sort of project a growth rate for the coming 12 months, you feeling bullish?
I think with RDR coming in, I think advisors are going to have to look probably more holistically at a client's portfolio. Cash has often been a forgotten asset class within a portfolio, so I think with RDR almost forcing a bit more of a debate about a client's strategic cash within a portfolio, I certainly see it as an opportunity for us at Investec specifically, and I think it's an opportunity for both the platform providers and the advisors themselves to add value to their underlying clients. So whether that's by getting a better rate than the default cash account, whether it's tapping into some numbers that I heard recently from one of the big platforms, was that of the 2 trillion savings and investments market, 1 trillion of that, missing a zero, is held within cash and deposits. So clearly there's a huge market there that platforms, if the platform industry looks after 200 billion, I think is the number I've heard recently, there's a much bigger slice of the pie that's available out there. So I think it's time that cash no longer it becomes the forgotten asset class that it has been.
Okay. Well, maybe you can come back in 12 months' time, we'll sit down, replay this and see how it's done. Thanks for talking to me today, Toby.
Great, thanks, Ollie.
Thank you.